What's up, traders? Welcome back to my channel. I remain your boy Onoskid FX. So today we will be looking at the concept of SMC. SMC is a trading concept that have helped a lot of traders to actually improve their chances of making profit in the market. It has improved their technical skill and given them a strategy that helps them to feel calm whenever they approach the market. But the deficiency in this strategy is the fact that it is somehow tedious because many people, especially beginners, do not know the right way to actually approach the market using this concept. That is why I've taken it as a responsibility to bring this information to you so that you can learn the proper way of using SMC as a strategy. Alongside in this video, you're also going to learn the relationship that exists between the ICT and the SMC, because people separate these two concepts, and you will be amazed at the end of this video the unique relationship that exists between them. This relationship will help you to have a calm mind and a sound mind whenever you approach the market, knowing fully whether you know what you're looking for and you know that there should be no confusion whether this concept work for ICT or this one is for this, because you see a lot of people talking about I trade SMC, the other will say I trade ICT. But nevertheless, at the end of this video, you will know what it is, how to use it, and the relationship that exists between these two concepts. So without wasting much time, we dive into the chart. Remember, if this is your first time of viewing my content, kindly make sure you subscribe to this channel, share this video to others so that they can also learn from this. Thank you very much, and see you as we progress in this video. So guys, before we dive into the chart properly, I want us to look at what this SMC actually stands for, because I've had a lot of people talking about SMC, ICT, and many traders don't even understand what this concept actually means. This ICT and SMC, it seems it have a kind of unique relationship, but then a lot of persons out there don't really know what is the relationship that exists between ICT and SMC. But then before I dive into the relationship, what does the word or the acronym SMC actually means? It actually means smart money concept. All right, this is a concept used in trading the market, and this concept is based on the understanding of what institutional traders. This concept claims to understand the footprint of institutional trader and then what people refer to as the smart money traders. So you want to also, trade in alongside with the institutional traders, because we have believed that, I've said before now that out of the 100% of the volume of money generated in the Forex market, 5% of it is coming from um, retail traders. That means that higher percentage of it is actually coming on from, other institutions like the bank and all of those things. So the smart money concept is to teach us how we can actually follow the footprint of what these institutional traders are doing so that we cannot be used as liquidity. All right. So if you don't understand the concept of liquidity, kindly visit my page to watch the previous video which I have done regarding this concept. So without wasting much time, let's continue with the topic. You need to actually understand what market structure. You need to also tell under market structure what are you looking for, because you're not just there to just mark out anything. Your main target is to actually figure out what price is doing. Is the market bullish? Is the market bearish, or we are in a ranging market, or the market is actually consolidating? So this is what you want to do under market structure. Now, the idea of you looking at this market structure or understanding where price is heading to or where price is coming to is for you to know what to do next. And that brings us to the number two, or the second thing that is very much important to you, which is what you should know or what you should do. Number one, you need to know or understand whether you are trading what a continuation or a reversal. And these are the two things you want to pay attention to. You don't want to pay attention to, you don't want to trade something like maybe a retracement or a pullback. It's either you are trading a trend reversal or you are trading a continuation. So having said that, let me quickly chip in what is the relationship that exists between an ICT and what SMC. Now, a lot of people will tell you they are using ICT concept. There is no such thing as ICT concept, all right? There is no such thing as ICT concept. ICT, which is what we call inner circle trader, is a person on its own. And who is this person? The person is the name of this person is Michael Hoodestin. So he is the one that people refer to as what ICT. That is just his own nickname, or his name rather. But ICT as a person uses SMC
as his trading concept. That means that ICT strategy is what SMC. So when you hear people talking about I use ICT, no, there is no such thing as ICT. ICT as a concept. ICT is not a concept. ICT is a person that teaches SMC as a concept. So I believe you guys understood this now, because a lot of people have been making mistakes. They don't really even know what is it. They just go online and then start making research that may not be helpful to them, or you hear them telling you that, oh, me, I don't use SMC, I use ICT. There is no difference. ICT is a person. His name is called Michael Goodiston. So he uses what? SMC as his trading concept. So now let's dive into properly um, how you can actually understand this concept better. So for this, like I said, the first thing you want to do is to understand the structure of the market. And how will you be able to do that? First, you need to scale up to the what higher time frame, says the 4 hour, and you need to be sure whether what price is doing. If you notice that price is currently in a bullish move, that means you want to see something like this. You know, price will start creating structure, bullish structure to the upside, right? So when you see this type of thing on the 4 hour time frame, or daily, excuse me, please, or daily, what you just need to do is to do what? Is to look out for what? A continuation trade. That means that you are looking out for um a bullish trend, right? You want to go to the lower time frame, like the 15 minutes, and then wait for price to give you a corrective move, and then you anticipate to actually enter a bullish market. Now, for you to be able to get an entry in a bullish market, there are some few things you need to pay attention to, and one of those things is what? A change of character. What is a change of character? Change of character is a sign that there's a possibility for a reversal to a desired direction. What do I mean by that? For instance, if you have the market creating you know, maybe lower lows and lower high, lower lows and lower high, lower lows and lower high, lower lows and lower high. And all of a sudden, price decided to give you a lower low. We expect that the market should create what? A new lower high and a new lower low. But then price decided to break above this. So as at this level, we said we have what? A change of character. So this is where you have a change of character, right? So how do you relate this information? How do you relate this information to what we are doing here? Remember what I said, that on the 4 hour time frame, you want to look out for what? Where price is coming from, where price is going to. And for that, we see that price is coming from this low and heading towards this direction. That means that price is bullish. Now, when you scale down to 15 minutes, you want to actually look out for what? A retracement. So this marking is on the 4 hour. And so we are trading within this range here, right? We are trading within this range between this high and this low, right? So what you want to do is you want to wait for price to give you a retracement, because if you go to the lower time frame, what you will see is that price is creating something like this, minor structures like this, right? So you want to pay attention to what will happen as price decides to give us, this type of structure. So when price has given you these minor structures like this thing you're seeing here is on the 15 minute. This single line here is on the 4 hour. On the 4 hour, you will just see just a little retracement. But then when you scale down to 15 minutes, you will see a different trend that may probably seem that, oh, market is actually you know, is trending to the downside on the 15 minute. But you know from the higher time frame perspective, that's what price is bullish. So what you want to pay attention to is, number one, you want to look out for what? An order block, right? You want to look out for an order block, which is very, very important. What is an order block? Order block can be a bullish order block or a bearish order block. But since market is bullish, what type of order block should you look for? You want to look out for what? A bullish order block, which is the last bearish candle before a massive push to the upside. That means that from this region, there should be an order block around here. When we get to the chart, we understand better. I just want to lay a foundation for you to understand this concept better. So there is an order block around this region. You probably should mark it out on the 4 hour, or minimum on the 1 hour time frame. So once you've been able to do that, the next thing you want to do is to expect price to actually tap into this order block. So the moment price tap into this order block, what do you want to do? Do you want to start buying? No, this is the higher time frame. So that is when you can now come down to this particular um 15 minute, this lower time frame. So on the 15 minute, now price has tapped into your order block on the 4 hour or 1 hour. Now you're on the 15 minutes. What do you want to do next? You want to expect what we call a change of character, which is what price should take out a previous high, right? Because price has been creating series of lower lows and lower highs. So the moment price tap into the block, you want to expect maybe something like this should happen. And then when price moved from here with an aggression, it will also create some sort of imbalance and still order block. And then sometimes it will give you this liquidity, right? And you might be tempting to, you might be saying that what price has actually reversed and all of those things. But then as an SMC trader, this is when you cannot have your entry. Number one, you have a higher time frame order block that price has just mitigated. What I mean by mitigated is price has tapped into it and give you a reactions from it. Now you are able to see a chalk, which is what we call a change of character. Then the next thing is you want to actually see that there is a liquidity resting below this order block, which you have just marked out. Then what? You're waiting for price to actually come back, take out this liquidity, and then react from here, which is where your entry will be. So the moment price come back to actually take out this liquidity and tap into this block, that is when your entry is ready. So as at the point where price is giving you a reaction here, then you will not bring back what you've learned concerning candlestick anatomy. There are a lot of persons that uses pending order. They use maybe buy limit or sell limit, but as for me, I always want to wait for what trade confirmation. So this is how you actually use your SMC. I believe you guys are getting the concept. It is pretty simple. The first step is what? You go to the higher time frame. Second step, you actually look out for, um, an order block, allow price to tap into that order block, spot your change of character, and then look out for areas of liquidity. Then you will be able to find a good entry. So before I proceed with the other explanation I have regarding this concept, you can join our Telegram channel using the link in the description of this video. And also, there's a program that we are hosting. We are planning currently. This program is coming up next month. You can see this is the flyer. This program is coming up next. It's a real-time trading bootcamp, and it's just strictly going to be, practical trading. So you can actually come in at a discount price. I'm not going to irrespective of the time you come, you still get the discount as $30. So if you're interested, you can join the Telegram channel so that you'll be able to proceed with your registration. The registration is currently on. Like I said, it's a real-time trading. We're just going to be trading live together, irrespective of your account size. The moment you have little knowledge about trading, you can always register, and let's see how we all can grow together. So let's continue from where we stop. So this is how you actually spot an entry using SMC. So if the market is bearish, that means that you are seeing sort of lower lows and lower high, lower lows and lower high, lower lows, right? Sorry, lower high, then lower low, right? Then the next thing is you want to actually spot out a 4 hour order block. Let's say this is your 4 hour order block, right? Price needs to retrace back. So as at the point where price has retraced back, so for price to retrace back, go to the 15 minutes, and then this is what you will see. You will definitely see substructure or minor structure that will push price, back into this block. So the moment you see that, you want to wait for what? A change of character. That means price needs to take out the previous um higher low on the 15 minutes, right? And then once this happens, you will definitely see a new order block that the market will create. And then this market will definitely create some sort of liquidity. It could even be, what some of you may call equal high or double top, right? Something like this, and then it will begin to set the downside. But you will not be quick to enter because price will come back to actually take what? This liquidity and then tap into your block. And sometimes if price decides to create imbalance or what people call FVG, that is fair value gap, then that is a high probability setup because you have liquidity and not just that, an imbalance before your order block. So all you just need to do is to wait for price to tap into that block and give you a candle confirmation, and then you enter your trade. So this is where we'll be stopping. I'm going to give you a live chart example in our next video. So if this is your first time of viewing my content, kindly make sure you subscribe to this channel, share this video to others so that you can help the YouTube algorithm to recommend this video to more people. And don't forget to join the Telegram channel using the link in the description of this video. And also, the program is still on. Make sure you register and then be part of this group. Thank you and see you in our next video. Peace out, guys.